Luke, how do these markets feel to you right now?
Pretty nervous, actually. If you're sitting where I am in credit and kind of debt markets, it feels very jumpy. It feels we're hitting a bit of a soft patch.
The data certainly highlight that. But what is there anything else other than that?
Well, we've been discussing this pretty heavily, and I think it's just an air pocket. And we're going to get back to growth again later in the year, in which case we could settle down again.
Yeah.
But, you know, the next
corporate numbers have been good, so what?
Absolutely fine. But some of that's just bringing forward growth, right? Especially in the US, where we've had such a big tax push into this quarter. It could just be bringing forward that growth. So, you know, I think we could get a couple of quarters of pretty nervous markets, of credit markets feeling a bit shaky, equity perhaps very volatile. But then hopefully we get back to normality at the end of the year.
Why is the concern just that the economy is peaking, that this sort of global concerted growth that everybody was so excited about last year, Luke, is kind of rolling over now?
It's going to at some point, and there are signs along to that road, Matt. And, you know, if we see an inversion in the US curve, which we've been talking about for ages with this 2-10 story, then I think we'll be pointing to real problems down the road. But for now, we're at least a couple of years away from really running into big problems for the economy. Just for now, we're OK. It's just an air pocket. We should get over it. There's a few things to watch out for us to be wrong on that. But for now, that's how we feel.
Is credit... Are there different signals coming out of the credit market than equity markets at the moment?
I wish there were. Very much not. I mean, the volatility spike we saw in February is still feeding through credit, and it feels very soft.
Equities are back down.
Nervous.
So equity, we had a close below 15 on the VIX Friday. So equities are kind of have retreated from that.
And you know what? We're wider again this month. We tried to rally all through April and failed by the end of the month. Credit doesn't feel great, actually.
OK. And your sense, when do we pivot? When do we start to get back to the kind of the move back towards the end of the year normality? When does that start to happen? So
I think once we get over the Fed interest rate hike, it's probably going to be coming up in June.
Yep.
I think we won't get any interest rate hike from the bank, and we'll probably talk about that later on anyway. I think once we're over those and we can actually get past this concern in the short term about the economy, I think credit could start looking attractive again for investors. And actually, and I know it's my market, but sterling credit in particular looks really cheap versus dollars and euros at the moment. So, you know, when we do get back into that wave of people getting interested again, maybe.
Let's not get ahead of ourselves. We have this planned for a later block, Luke. Let's stick with the equity markets open right now. Let me just ask you, when you look across the major regions, Europe, the U.S., and Asia, you see growth slowing everywhere? Or are there places where you think it's weaker as far as developed markets?
Well, Europe's struggled to get any large amount of growth anyway. It feels that's where the weakness is going to be most felt. And we've got such a big stimulus coming in the US. You might get a little bit of a slowdown during Q2, but I think it could be kind of coming back quicker in the US than it is everywhere else. China, I think, is one to keep a watch on, very much so. The slowdown in growth there has been very marked over the last couple of years, and they're now getting back on the horse in terms of trying to think about stimulus, cutting the reserve rate. That could be an area, I think, again, where Q2 could be tricky, especially with the big rise in food prices that are going on at the moment. That could be sucking some growth out of Asia as well.
OK.